Are you self-employed and getting turned down by banks for a mortgage? You're not alone. Hi, my name is Alex. I'm here to help self-employed borrowers getting a home loan. If you're self-employed and looking to get a mortgage, you might be a little fearful because you hear all the horror stories of people getting turned down, or it happened to you when you went through the process of getting a mortgage and got turned down. I'm here to let you know that you have options. I'm going to share 2 different types of loans you can use to get approved for a mortgage. So how do we get approved if you are self-employed? You own a company or you're a subcontractor receiving 1099 at the end of the year. Your income is different from a regular employee who is a W-2, who is because a lender takes on more risk when a buyer is self-employed. Because lenders want stable, consistent income, so when somebody works for a company, normally that income is viewed as consistent than someone who is self-employed, because they are getting a paycheck and there is the assumption that the company is doing well. When lender looks at self-employed buyer, the assumption is you own the business, and the lender needs to make sure that not only you are underwritten, but the business is also able to provide income for you in the future. What's called the ability to repay back. It's basically saying lenders have to look at and see, can you actually afford this mortgage, and can you pay it back based on everything you provide to the lender. The lender only considers taxable income after the deduction for expenses. Maybe you made $100,000 last year, but you wrote it off, $50,000 of deduction, so now you only made $50,000. Self-employed buyer needs to have a minimum of 2 years of being self-employed. So if you were a W-2 last year and now you decided to open your own business, then you have to wait for another year. The reason is because lenders want to see that you have 2-year history of self-employment and you are making money. Now let's look at the option that's available. The first option is the traditional loan, and the second option is non-traditional loan or portfolio loan. It's a niche product that is designed for non-traditional buyer or self-employed. The traditional loans are just your regular loans like your conventional FHA, VA, USDA. Most of the time it's used for regular borrowers who qualify based on the rules that's set. The non-traditional or niche products is being called is because it does not follow the rules of the regular traditional loans. These niche loans allows you to not to show your tax returns, and they are used alternative documentation to prove your income. Let's look at traditional loans. When we are trying to qualify the traditional loan, it looks at the net income. So when we are making $100,000 and 50 of it is write-off, now our net income is only $50,000. Decrease our buying power by half. It's also required 2 years of personal and possibly business tax return. It can be scary for some borrowers. What I suggest is have the docs ready up front to show to the lender and let them know you need help exploring your options. By doing this in the early stage of your journey to owning a home, you can plan with your loan officer and your tax advisor on what to file so you can qualify for a mortgage. When you do this, then it will save you time and money because you're not having to pay high interest rates for your loan. You're getting the same rate as a regular W-2 buyer. Now let's look at the non-traditional loan or the portfolio loan, the non-traditional way of borrowing money for a mortgage. There are 2 types of non-traditional loan. One is a bank statement program. Instead of showing your tax return, a lender asks for your past 12 to 24 bank statements, and then they take the average of your deposit over the past 12 to 24 months, add it all up, and give you an income. This can be your personal bank statement or your business bank statement. If your business bank statement is used, the lender can only give you 60% of the deposit as income. For example, the last 12 months, all your monthly deposit added up to $100,000. You can only take 60% of it as income to qualify, which means you only make $60,000 last year. If it was your personal bank statement and you deposit $100,000 in the last 12 months, your income would be $100,000 if you use their personal account. The non-traditional loan program have a little bit of a downside. Through normally the lender needs 10% down or higher, but it can change anytime. The traditional products you can put down 0 to 5%, depends on what loan product you qualify for. The non-traditional side, you would need a higher credit score, range from a 660 or higher. The interest rate is usually about 1 to 2% higher than the traditional loan. The reason is because it's more riskier and the loan is kept in-house. It's not being sold to Fannie Mae or Freddie Mac like you would do with a traditional loan. The second loan for non-traditional loan is a no-income loan, which where you put enough money that the lender don't even look at your income. Usually borrowers are using this loan is because they know that they will pay the loan off within 3 to 5 years. They just want to get into the home. They know their expense, but they don't care because they know their financial situation. It's beneficial for them to do it this way. When you are getting ready to buy a home, have your lender review your taxes and ask the loan officer to take a look at the taxes to see what they look like right now to get that advice before you file your taxes for the upcoming year. So you can see, is there anything you need to change, hold some of the deductions so you can qualify for a mortgage in the price range you want. Being self-employed does not mean you can qualify for a mortgage to buy your home. It just takes time to you to understand what you need to do by planning out your process and getting it done. If you have any question, let me know. You can reach out to me. Thank you so much for watching.